Hi guys, welcome back to my channel, Subsistence Traveling. My name is Jay, and today I'm going to be talking to you guys about inflation, 2020, why I think prices are heading higher. All right, so just stay tuned. Okay, so my reasons for the reasons why inflation is low now, and I don't think inflation is really low. I think the numbers are underreported, but to an extent, the government numbers report that inflation is really low, and I'm going to tell you why that is. Now, the main reason inflation is low right now is because of low interest rates. Okay, now we're in a credit based economy, and interest rates determine your rate of return on all asset classes, whether it's stocks, bonds, real estate, if you own a business. Interest rates determine your rate of return on all forms of capital. So when interest rates are low, no one wants to put money to work. People will just sit on their money. Right now, the I forgot the term, but basically there's just lots of money just sitting around and no one is doing anything with it. Okay, this leads to the next point, which is weak bank lending. When interest rates are low, banks do not lend. In a low interest rate environment, banks will only lend to governments, corporations, and high net worth individuals. Okay, so the masses, it'll be difficult for them to get a loan. Okay, and that's the second reason why for low inflation. Number three is low wages. Okay, now the masses like you and me, we depend on wages for our income, and wages have been low. So we, these wages that we have now are like subsistence wages, sometimes even less than subsistence wages. So that's one of the reasons for low inflation is low wages, because people have, yeah, practically have no money. So those are the reasons why inflation is somewhat low now. Okay. Now, what will cause inflation? Okay. So now, my first point is the 20-year cycle. Okay. So I'm going to explain the 20-year cycle. Okay. So the 20-year cycle begins with a crash. Okay, it begins after a crash. Now, the first decade after the crash it benefits the wealthy. It benefits the stock market, in particularly tech stocks, mostly, but it benefits the stock market. It benefits real estate in primary markets, your New York, your Los Angeles, San Francisco, Chicago, primary real estate. It benefits developed markets. And when I say developed markets, I want to say mainly the United States. In our period, I would say mainly the United States. Now, an example of the first decade in the 20-year cycle would be the period from 1988 to 1998. Okay. Now, decade two, which is the second 10 years, the last 10 years of the 20-year cycle, benefits the masses. It benefits the material area of the stock market. And when I say the material area, I'm saying your commodities, your materials, your industrials, your transports, your banks, the material areas of the stock market. It benefits real estate in secondary markets, your Phoenixes, your Atlantas, Las Vegas, those are all secondary markets. It benefits emerging markets, okay? So that's who benefits in the second decade of the 20-year cycle. Now, an example of this would be the period from 1998 to 2008. Okay. Now, back to what else will cause inflation. Now, another thing that will cause inflation is the materialistic masses. Now, I call this the materialistic masses. Now, remember in I explained the 20-year cycle. Now, the 20-year cycle, the first 10 years benefits the wealthy. The second 10 years benefits the masses. Now, the wealthy are wealthy and all their material needs are met. So, because their material needs are met, they're the things that they want are not material. So basically, that's why tech stocks do, any things that would improve maybe efficiency or your effectiveness. That's why tech stocks do best in the first 10 years because they appeal so much to the wealthy. In the second 10 years, which benefits the masses, you know, our materialistic needs aren't met. Some of us aren't eating as well. Some of us, our living conditions aren't as well. So that's why our needs are more material. Okay, and that's what causes inflation of physical goods. The next reason is just-in-time inventory. Now, over the years, companies have been adjusting their supply chains and they're moving towards a just-in-time inventory. Basically, companies no longer overproduce or have excess inventory. Basically, companies only make what they need. And that allows for huge opportunities for supply chains to be disrupted. Right now, we're dealing with this coronavirus, and there have been reports that Hyundai is cutting production at their plant in South Korea. Apple has been cutting production in China. You're going to see supply chains disruptions, and a lot of it is going to be due to just-in-time inventory. Okay, the last reason that will cause inflation is the move in the developed world to a circular economy. We're moving from a industrial economy to a circular economy, and basically, there's a saying that says production equals savings, and savings equals production. Now, eventually, that's going to make the masses poorer. Okay, because if there's no production, there won't be much savings. Okay, if you notice, the countries with the highest savings rates in the world are countries that produce or manufacture or export. Okay, so when you have a circular economy, the masses won't have much savings. The poorer you are, is the more expensive things become because you have no choice. Okay, another reason why inflation will go up is government. Because inflation allows government to be even more powerful. Without inflation, the government probably would not be able to have the power and to be as large as it is now. Okay, so those are just my few reasons as to why I think prices are heading higher. I just advise you guys to do some research and look into these things because I think we're heading into a period of inflation. All right, so guys, I just want to ask you to like, share, subscribe, and just stay tuned for the next video. Okay, peace to all.